Welcome back. Today I have decided to talk about the fair value gap. One of my friend in YouTube, he asked me a question about the fair value gap, how I actually utilize the fair value gap. So I have decided that today I will talk about the fair value gap, and also I have taken a trade, not one trade, actually two trade. I'll actually discuss about those as well. So here is the dollar index chart. If you have watched my weekly bias, this weekly analysis, you will know that I was expecting that price will respect this order block, or if it is very heavy, then the consequent encroachment of this week is the last days. So price either will respect this order block or will respect the consequent encroachment, then it will start to go higher. So today's session is almost end. 30 minutes left actually. So we'll see what happened to the DXY today. It's not important. Actually, guys, if I need to say everything about the fair value gap, it will be a very big and boring video. So I will try to make it shorter, but I don't know how long it will be. If you watch from first to last, I think it will be benefited for you guys. Let's go to the yes. So here is the mini S&P. Let me clean this first. I forgot to. Okay. So here is the mini S&P. Yesterday when I have uploaded the video about the weekly analysis, it was just before the Sunday open. I was expecting that market will open somewhere here and then it will trade the order block and then it will go higher and clear this liquidity. I expected that market will go to the level of the the high of this hourly fair value gap, I fair value gap, and then it will trade lower. We'll discuss everything about this price section. Let me just give me some time so that I can explain the fair value gap. So here is the three fair value gap. Please keep in mind. This one is the hourly I fair value gap. This big fair value gap. This one. This gap. And this is the daily fair value gap. Daily fair value gap low. Let me change the color so that it will be easier to understand. Okay. So this one is the hourly I fair value gap. This one is the hourly fair value gap, this gap, and this is the daily fair value gap. Let's go to the 5-minute chart. So start from the beginning. Market has opened here. This is the Friday close. This is the Sunday open at 6 p.m. This is the opening gap. The Friday to Sunday opening gap. This is the gap. This is the consequent encroachment of this gap. So price open here, trade to the high, to the low actually of the hourly I fair value gap. Then come to the consequent encroachment. You see this level. It has respected this consequent encroachment very beautifully. Then it went higher and cleared this liquidity. I was expecting that it will take this liquidity first, then it will come lower. And this was the water block. Actually, I was thinking that market will open somewhere here and then respect this water block. What it has done over here, it has make a high open, make a actually opening gap, then use this gap as its as a support to send the price higher. When a market has come to this gap, the hourly fair value gap, this is the consequent encroachment of this hourly fair value gap. I didn't get any market structure shift lower so that I could take a trade here. So I was waiting. Actually, I was outside and I was watching my phone. Um, what the price action is today. So I saw that market is actually going higher, higher, higher. At 9:30, it went to this high. You see, this high is the 9:30 high, 9:40 actually, 9:40 high. You remember this gap? This is also the hourly fair value gap. So here is three gap. One is daily fair value gap, gap, hourly I fair value gap. How I do use this all of this gap, and how do I know when I should take entry? I'll describe everything. Let's go to the 1 minute chart actually. Okay, so you see this run, this is 9:30 run. It's a run. It's most of the time it's actually the fake run. I'm expecting the lower prices. So market went here, then come back, go again. Then this is the market structure shift. You see, this low has taken by this low. This is the gap. If you take the entry over here, it will be the 22 YT model. So if you take the entry over here, then it will go lower. But I didn't take entry over here. Why? What is the reason? The reason is when market actually shift the structure, it come to the high of the hourly I fair value gap. This gap, you see, this gap is the hourly fair value gap. Remember the hourly fair value gap, consequent encroachment. It just come to the upper portion, sorry, not upper portion, actually the high of the hourly fair value, I fair value gap. So I was thinking that if I take the entry over here, it could be a loss, because if price would like to go lower, it should close the body inside of this fair value gap, but it didn't do that. It just stopped, the body was stopped upper of this fair value gap. It the wick, it support the place over here, so it make it support. Actually this hourly I fair value gap, this was using as a supporting price come here, go higher. Where did it go? It went just over here. You see this high, this is the equal high. Price make the equal high, then break lower. Here is another market structure shift. You see this is the market structure shift. This is the market structure shift, and you have the gap actually. This is the gap, and there is a very small gap, but price didn't come here. It didn't come here. I wasn't looking for this gap. I was looking for specifically this little gap. This gap. After shifting the market structure, price started to go higher. If it come here in this fair value gap, then I would take the short, but price didn't give me the chance to take the short. It breaks lower. You see where it came. It came to the hourly I fair value gap, consequent encroachment. This is the level where price actually acting as a support. So this fair value gap is not actually, this fair value gap is not, what can I say, you can take short entry in that fair value gap. Why? Because the price supporting the consequent encroachment of the hourly I fair value gap as a support. See, price come here, go higher. Then it break it down again here. This is the gap actually. Let me mark the gap. You will understand why you have to mark the hourly fair value gap, that the higher time frame gap, and at the lower time frame gap, which gap you have to take the entry. So if you think this is the market structure shift, because it has break the consequent encroachment, so this gap is valid. If you take the entry in that gap, you have to put your stop loss above this swing high or this high. If you put the swing high here, you will take a loss because it actually traded this high. But if you put your stop loss over here, then price came to the lower part of the hourly fair value gap. I didn't take this entry as well because you will see the stop loss will be like 6 handle. It's huge. I can afford it. Even if you think this high, it is also 4 handle. It's big. So I didn't take this entry as well. I sacrificed the morning session. This is the first day of trading. So I was thinking what actually market wants to do. Then markets come lower. This is the noon here. This is the noon. All of this trading has happened to the noon. I was just watching over here. Market go higher, 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 higher. I didn't take anything from here because my bias is bearish. So I was waiting to take a short, not buy. So I was giving the market to make the setup. Then you see here at 105, it has cleared the equal highs. That means the buy side liquidity. Then comes down, go higher. You see this in this place. I'll show you something more very important. Let me clean. Okay, look at this place, bro. Market just went to the buy side liquidity. It has taken the buy side liquidity, comes lower. Forget this one, just forget it. There is nothing. Okay, there is nothing. So it has just went higher to this gap. You see this gap, this candle gap. This is the I fair value gap. So market come to the gap. I was waiting for the market structure shift. There is a shift in market structure here. If you see, if you want to mark this as a market structure shift, it's valid because this is the intermediate term low. It has traded this gap, so it is valid. But here is no fair value gap, so I wasn't able to take the short here. Market go to the high, take the buy side liquidity from here, and then break lower. You see this big low. So here I get the big market structure shift. If you mark this one or this one, it's up to you, but I'll mark this one because this is the most obvious low. So this is the market structure shift. This is your fair value gap. Okay, one more thing, there is a breaker. This is the breaker, very important, bro. This is the breaker actually. So if you mark it as a 22 YT model, you will see it's perfect. It's totally perfect. But why I will take this short? not that short. This is also a very, it has cleared all this liquidity over here. Market, a very clear market structure shift, fair value gap, but I didn't take the entry over here because market shift, the candle which has shifted the market, it supports the hourly I fair value gap high. So I wasn't sure that it will go lower, because if it wants to go lower, then the body can close inside of this gap. It didn't do it. The wick just come here, body closed up to the gap. It's a sign that market can go higher again. So you have to think like that way. Every gap is not the perfect gap for taking short or taking buy. Do you understand, guys? If you don't understand, just comment it below. I will try to write it down, reply your question. Anything, bro. I just want to share my thinking with you guys. But here, when it has shifted the structure, you see this, all of this low, it's higher than this high. It is not, this lows is not supporting the high. So this gap is valid, but market didn't went there. So you actually, we didn't get an opportunity to take short over here. This is valid. This is not valid. This gap is not valid because of this parallel gaps high. This is also valid, but your stop loss will be very higher, and market has already, you see, it has already came to the discount level. So I think uh, this short is also not valid. It is inside the fair value gap. It is supporting the consequent encroachment of the fair value gap, and it is also supporting the low of the hourly gap, fair value gap. You see the big gap, this is the low of that big gap. You see, this is, it's supporting over here. So it is not an obvious trade. You can gamble, you can take the trade over here, but it's not obvious. Now come to this point at PM session, 137, something like that. Yeah, 137. When market went higher and cleared the buy side liquidity, my bias is bearish. This I fair value gap, I could take the entry over here. It was valid, but I love the 22 YT model. So I was waiting for market structure shift. Market come here, give me a swing low, go higher and clear the liquidity of this high, then market structure shift. This big run. There is the fair value gap, also the breaker. So if you take the entry over here, where will be your stop loss? Where will be your profit target? Let me show you my execution. Here is my execution. You see the arrow behind my cursor. Here's some. When just market touched the fair value gap, I took the entry, and it should be like this way. Let me mark it. If you take your entry over here, your stop loss should be somewhere here, just up to the breaker, because price should respect this breaker. Where will be your the short? Forget this two line, bro. I will explain why, what is this two line later, but right when I was trading over here, there was no this line. So my target was just upper part of the hourly I fair value gap. Why here? It's because market actually respect this high one time. This gap is very important for today, this hourly fair value gap. You see, market actually traded this gap very beautifully, every level, upper level, consequent encroachment, and also the lower level. So I was actually on my phone, I took the trade by my phone. So I closed over here, otherwise maybe I would open to the middle or the lower part. So that was my first trade. You see, I closed here. I closed my trade there. That was my first trade. So I think you understand a little bit about the fair value gap. Who is fair value gap and how you actually use the fair value gap, when, and what is the reason, how I actually utilize the higher time frame, our time frame, higher time frame fair value gap, and also the lower time frame fair value gap. Lower time frame fair value gap I actually use for taking my entry, and higher time fair value gap I use to understand what markets want to do. So when market break lower, you see this low, market actually respect this low. You see there is a consolidation, market went higher. Okay, so why I took another short over here? What was the reason? Let me show you again. So this two level, this is the I fair value gap, 5-minute I fair value gap, and this is the another I fair value gap, and the consequent encroachment. This is the consequent encroachment of that 5-minute fair value gap. Okay, let me put the 1-minute chart again. So when market traded to the low of the hourly I fair value gap, I was waiting for shifting to send the price to one of this gap. When price come to this gap, the lower I fair value gap, I was waiting for the shift in market structure to the lower for taking the short, but it didn't happen over here. Market come and make the hourly I fair value gap as a support, go higher. This is the upper 5-minute I fair value gap, consequent encroachment. Market actually tapped there and gave me the market structure shift. Okay, let me clear this breaker. I'll show you the breaker. Okay, so you see it has traded the consequent encroachment of that higher 5-minute fair value gap, I fair value gap, and then break lower. This is my market structure shift, but there was no fair value gap. Why I took the entry over here? What was the reason? There are so many reasons. First of all, you remember the first one I show you that wick came to the hourly fair value gap, body didn't close inside the gap, but here the body actually closed inside the hourly fair value gap. You see this candle? It has shifted this swing low. So this is the market structure shift for me, and it shows that markets want to go and trade this gap, this hourly fair value gap. It didn't close up above the hourly I fair value gap. It closed inside the I fair value gap, so it's valid for me. Now here is the order block, also the breaker. You see this one, high, low, higher high. The lowest candle, this is the breaker. This high, you see the high, this is the high of the breaker, and this is the low of the breaker. When market has shifted, I marked this order block. Although I marked it and the price was so fast, so I didn't get a chance to take entry over here. It went like here, you see there. I took the entry as well here because this is the low of the I fair value gap, 5-minute I fair value gap. I took the entry here, and my target was the consequent encroachment. Sorry, no, my target was just to the lowest part of the I fair value gap, but I took the first partial to the consequent encroachment because My total weekly bias is bearish. This is the first day of the week. If you know about the ICT PO3, that means a candle will open, go higher, come lower, it will go a little bit higher, and it will close here. So this is the actually let me show just this one. So we open here, it will go and trade above the opening price, then the big down. You see this down. I'm expecting this. So this is the first day. So I'm expecting the higher prices, and it's actually doing over here that thing. That's why I took a short over here, and I took first partial, bring my stop loss to the break even. You see here, market traded the consequent encroachment of the I fair value gap and stopped out me to the break even. Maybe there was some profit, something like that, and I closed everything. So here is the trade actually. This is the first trade I took. This is the second trade. I take a partial, then I stopped out. I think guys it will help you a little bit understanding what is fair value gap and how actually we use the fair value gap. What is the summary of this video? The summary of this video is you have to mark the higher time frame fair value gap. You see it has just traded the daily fair value gap low, and the thing happened over here. The bodies didn't come to the gap, it just traded by the week. That means the price is actually supporting this gap as a support. It happened over here as well. Price went there by the week, body closed behind this daily fair value gap low. That means price wants to go lower, it doesn't want to go higher. It is just using this hourly fair value gap, the daily fair value gap as a resistance. When it happens to the higher time frame gaps, now I will actually look for a market structure shift lower. This gap helps me to confirm that market will go lower, and when I will get a market structure shift over here, I will take the short there. Where will be my target? This gap, until these lows are not taken. All of this place actually will trade this week. You see a lot of liquidity over here, everything. It is just making the liquidity. You see all of this liquidity. This is this week's target. They're very juicy. I don't know guys, do you understand or not, but I tried my level best so that you can understand how to use the gaps, how to trade the gap. Thank you guys. See you again. Bye bye.